Let's move on to Afrimat, a building supply and concrete products group which was formed by the combination of Premier and Lancaster Group. It's also listed on the Altx. It listed in 2007. Paul, a nice surprise for shareholders recently was that in light of the fact that you've had SDC being announced to increase to 15% from 10%, that was in the budget speech last month, they've now declared a final dividend, Afrimat that is of course, of 19 cents per share prior to the announcement of their annual results.
So they're sneaking that in so that the 13-cent dividend isn't subject to the higher withholding tax after the 1st of April. That's fine. Look, it is an interesting group, and it's a survivor of that class of small cap, really small cap companies that came to the market in the construction space in 2006, 2007, many of whom took a heavy strain, one or two of whom are on life support as we speak. I mean, they're fairly sizable. They're about an 800 million market cap company, and as you alluded to in the introduction there, the Premier business was the Cape-based thing, and the Lancaster, I think, was Natal and sort of other regions. So they're quite big in building supply aggregates, also in concrete products, which are like curbsides and things of that nature. So quite a well-established group. The CEO was involved with putting the group together, and they've kind of done okay. The share price took a heck of a smash, you know, in that period. It went as low as sort of 3 Rand 30 and thereabouts, recovered quite nicely up to sort of 5 Rand 60 now.
But 50% down from where it was at the peak in 2007. Yes. But before we get into the share price, let's just get Janine's views. Let's just kick off overall. Your views on the Afrimat right now within the operating space of the construction sector, and as one of the survivors, as Paul said.
I think Afrimat, not looking at share price, but just looking at operations, they've held their own quite well. I think they had one period of really that the earnings were really down. But they never made all those acquisitions during the boom period, and they've picked what they wanted to buy quite carefully, and that has really paid off.
Have they been picking those companies at cheap prices? The latest one that I picked up was buying the Clinker Group for 123.5 million Rand.
We're looking at an ROE of 24% that they're going to realise, and it might be a shorter life of mine, which is about 10 years than the others, but they really, it's really a growth area, and it's where the demand is. So I think that they've picked that quite well as well. And then last year, Glen Douglas was bought as well, which was the major driver of growth during the year. So moving into industrial minerals away from construction at exactly the right time, because if they didn't buy Glen Douglas, I think they would have had earnings that were down significantly and in line with their competitors.
So there's this theme of diversification,
yes,
that is coming through with the construction sector. What are your thoughts on the fact that it's moving towards, as she said, industrial minerals?
Look, I like the fact that in a construction process or in a boom time, the building materials suppliers and those that are sort of a little bit further back up the supply chain owning the quarries are going to do well. But we know that Quarry Cats did well to get themselves sold to Group 5. Wern, you know, listed and really had serious trouble. They did acquisitions in the Gauteng area and in the Western Cape. I quite liked the management team. We had some clients who owned the stock, really badly battled. Afrimat, to their credit, as you say, didn't make a big noise about what they were doing. They just quietly kept it going. I know that they had quite substantial work in the Medupi project. That was also a plus. You know, I think they are one of the companies to look at in this space. But again, I worry about when the business is good, it's good, and when the business is not so great, it's not so great. And what do you pay for the stock at the time?
And then are you basically saying that they could be positioning themselves to be a takeover target? Would you? No,
not necessarily. I'm not prejudging it like that. I'm almost kind of saying, well, what they will do and how they will do as businesses depends fundamentally on how the building cycle evolves from this point on.
So cyclical.
So if you're a bearish kind of person and you think the government is never going to pay any of its bills, like it currently doesn't when it does new construction projects, and if you think that every single public sector project is going to be plagued by lots of court cases, if people are going to continue to fight with each other instead of paying for their bills in the construction space, and the companies are all going to do badly, these companies are all going to do badly. Conversely, if you think margins are going to firm and the global economy is going to boom, well, then you'd ought to be buying them. But I don't have that conviction one way or the other.
Do you have a conviction right now? Let's get into the hot or not space. Do you think that the stock has any merit to it?
I think so. I just think it's run quite significantly. I think it's about up 40% from last September. So I think that a lot of growth is priced in at the moment, given where the market is at, and we're not really seeing any big growth happening. But then you're looking at some corporate activity around the construction sector and aggregates in general. Group 5 wanting to dispose of their construction materials. PPC buying into Pronto, which is their ready-mix business. So I think that slowly but surely people are busy eyeing some possible acquisitions
M&A,
going forward. Yes.
Yeah.
So that must say that there is something lurking, coming out in the.
We've turned the stove from minus 5 to maybe what, -1, or we're starting to get into the positive
definitely
side, starting to get some heat on the stove.
I think definitely, and I think in terms of consolidation, there's definitely room for consolidation, especially for the guys that didn't do so well during the downturn. And it's all about management as well. I think Afrimat's management, if I compare it to the other competitors, were much more conservative and cautious, and they made the right acquisitions at the right time, or sat back and said, no, let's pause this acquisition.
Okay, so hot or not?
I think it's still hot. It's just run very hard, so I wouldn't think that it's going to continue that trend in the short term.
And I'm going to be cheesy and stay with not hot.
Not hot.